Private equity, investment banking, hedge fund, or venture capital? Are they your passions for a career? If so, go to budsforfinance.net and learn about my 30 years of investment banking experience at Goldman, UBS, Drexel Burnham, and McLaren Capital Partners. So you've gotten into investment banking or private equity firm or venture capital firm. Hedge funds probably really wouldn't fit into this category. And the question is, what is a deal? I mean, what's the deal process? Why do I like to say that it's really, you really need a warrior ethos to succeed in this business? Well, let me just walk you through, in very simple terms, what would happen. So you have a company, public or private company, and the board or the owner decides it's time to sell. And they can sell for a whole host of reasons. It could be that they just want to retire. It could be that the market is hot. It could be that they have other family obligations. One of the more successful and more fun deals that we ever did was a company where the owner of the business had a 33-year-old daughter and had a 33-month-old daughter and 2 or 3 wives and all kinds of stuff like that. So he had this dynamic came up, and so it was just time for him to sell the business. So let's say it was a little bit larger. Let's say it was a public company. So the board comes along, or the board decides that it's time to sell the business. So they sell the business. They go out and they then have relationships with a dozen of the big investment banking firms, the Goldman Sachs and Morgan Stanleys and Jefferies and Centerview and all those kind of guys. And they have a dog and pony show. That's literally what they call it, where each of these guys comes in, they put sort of a preliminary valuation on the company, and then the board or the CEO then goes out and decides, who can best represent the company. Is it Goldman or Jefferies or whoever the heck it is, and they get hired. So again, all this is totally confidential. It never gets out. NDAs are signed all over the place. So the investment bank will come in and will start due diligence. Coming in, looking at the company, tearing it apart. If you have any questions about what due diligence is, go look at my other video. So they'll put together a PPM, or the different firms call them different things. But essentially, it's a book. Might be anywhere from 10 to a couple hundred pages on the book, on the company, the industry, its potential, opportunities, all kinds of stuff like that. It's a sales brochure, essentially, is what it is. So as an associate or an analyst or an intern, you would have different roles in that. It might be more of a research basis. It might be actually writing a certain portion of the book or a certain section of it. It might be just organizing it and marshaling it. Whole host of different things. Every firm is a little bit different. So while the book is being put together, the investment banks will then go out and start talking to either strategic buyers and or financial buyers and say, hey, listen, XYZ company is going to be for sale. They're going to be soliciting offers, and they generally might have like a 1 or 2 or 3 page or just sort of outlining the company, and you'll sign an NDA. Now, one of the really sort of critical things that you're going to do as a junior person is going out and harvesting all these NDAs. And that's really critical, because you never want to also send a book out to somebody, and if they don't have an NDA, they're somewhat free to then take that material and do with it as they as they may. So NDAs have all kinds of different provisions in them, but it's a very important thing to do. And depending on the firm, how big or how small it is, probably not as an analyst, but as an associate, you might even have responsibility to negotiate certain sort of minor terms on the NDA just to get it done. Okay, so you've not distributed to anywhere from 10 to a couple hundred people, 100 different parties, say that this company's for sale. You have a one pager comes out. Then people come and say, yeah, we'd like to see the whole book. So they get the whole book, and they start going through it. They do their own due diligence on the company, on the management. They start asking around to certain people, what do you think about this? What do you think about the industry? What do you think about these people? Of course, you're sort of doing this very discreet. So at some point in time, the investment banks will say, okay, preliminary bids are due on such and such a date. So the private equity firm will come in. They'll get a team together of experts in that field if they have it, and they generally would. And they say, oh wow, this is really interesting, or no, that this company really sucks and they're going to get hammered. But let's say that they really like the company. If they really like it, they're going to say, okay, let's put in a preliminary bid, oftentimes called an indication of interest. And they'll put that in a 2-3 page kind of document. And again, as a junior person, you're really involved in harvesting all this, organizing everything, really being sort of the go-to person. If the managing director comes through and says, well, let's change the growth rate from X to Y, or what happens if we put in more debt or less debt or more equity, whatever the heck it is. So that's sort of your role. So let's say that you put in your indication of interest, and then the investment bank comes back and says, okay, we're going to pull this down to the top 10 people, top highest bidders for this company. So at that point, depending on what the scenario is and how competitive it is, you then have to put together, if it's super competitive, you may then have to go out and then literally raise the financing, do your due diligence, essentially come to the table for the final round with a firm, fully financed bid in place. Now it might have some small outs on it, but from the investment banker's standpoint, who's representing the company, they want to do away with as many risks as possible. What do I mean by risk? Financing risk, due diligence risk, market risk, et cetera, et cetera. So bids are due, and so you can imagine at this point that this is where people start writing big checks. Okay, if you're hiring consultants, you're hiring accountants, you're probably paying a bank for financing fees. You're doing all this kind of stuff. So you're writing some big numbers. And at this point, this is where the pressure really starts to build. Okay? Because people are tweaking their bids, people are tweaking their financing, markets change, etc., etc. So having what I call the warrior ethos here, where you're not going to crumble under pressure, is absolutely critical. You might be in the office 1, 2, 3 days in a row straight, or very little sleep. You might go home, take a shower, take a quick nap, come back to the office, and you're cranking away. So when people are interviewing and everyone sort of gets together in a room, what people always sort of sit there and they say, okay, we really like Ann or Frank or whomever it is. And the question almost always gets asked is, it's really simple. would you want to work with this guy, with this woman, at 2 o'clock in the morning when bids are due at 6, 7, 8 o'clock the next morning? Are they going to be just sort of losing their shit, or are they going to be cool, calm, collected, making jokes? Hey, let me go out and get Starbucks for everybody, whatever the heck it is. So, everybody is absolutely exhausted at this point. Bids are due. You have no idea if you're going to get this thing or not, and you spent a couple of weeks on this, just working around the clock, putting this whole thing together. Same thing on the other side. If you're at an investment bank, you're under this enormous pressure because the board now is coming after you and saying, okay, we've narrowed it down to half a dozen guys or whatnot. We want a deal that's fully financed, no outs, whatever. So there's a fine line. The private equity firms, the strategic, etc. Want to have some out if the market changes or the terrorist attack or whatever the heck could happen. And the board wants no outs. So that's a way above your pay grade. That's something that would be between, say, the senior managing director at the investment bank and the senior managing director at the private equity firm to sort of hash those things out. But during that process, there is a million different scenarios that people come up with. For example, it wouldn't be unusual for the investment bank to come back and say, listen, if you can raise your bid by $15 million, you've got it. Okay, well, so you think about it, and the private and the managing director might turn around and say, okay, where's the $15 million gonna come from? How do we change the capital structure? Does it come out of the senior debt? Do we try to increase the subordinated debt, the senior subordinated debt? Do we put in more equity? What's the scenario? What's the effect on our returns in that? Then obviously you have to change all the documentation. All the kinds of stuff is super high pressure. So let's say you then get the deal, then that's when the work sort of begins, because then you're going to closure. Now, in some instances, the investment bank is a super competitive deal. You may have to literally, at the end of the auction, you may have to sign the deal, like right then and there, with maybe a very minor out of, say, this due diligence or that due diligence, but you've committed. So if you think about it, you've won the deal, but there are 5, 10 other firms out there who've worked just as hard, have spent tons of money on lawyers, consultants, bankers, all kinds of stuff like that. And there's actually a name for those fees. They call them dead deal fees. And I've actually heard dead deal fees going as high as like $50 million. So, in other words, just to think about this, private equity firms spend $50 million hiring people, and they don't get the deal. So they eat that, and that comes out of the famous 2 and 20. So everybody thinks that the 2 is just pure profit. Well, if you have a big dead deal fee, that's going to eat into a whole bunch of that. So as the process sort of then goes along, as sort of the junior person on the deal, you're in charge of doing everything from getting coffee to getting executed closing documents at the closing. I mean, a whole host of things. So at that point in time, you almost don't want to, wear your good shoes, just wear your sneakers, or you're going to be running all over God's green earth. But the important thing is to just keep as calm as possible, act as professionally as possible, and you're in a very high visibility state at that point. You just committed to $1 billion, $2 billion, $10 billion deals, depending on which firm you're working at. And trust me, the CEO, senior managing directors, everybody is going to know, who you are. So always comport yourself as professionally as is humanly possible. That's basically. I've gone, very, very simple. I haven't gone into if there's a tender offer or all kinds of other stuff like that. I'll go into that in a different kind of a video. But the important thing I want to emphasize to you is how this thing, how you have this high pressure kind of environment that you have to get. You have to stay cool, calm, and collected. Your work has to be absolutely meticulous. Now, there's another kind of deal that you might want to look at, which is a financing deal, which is really what my specialty was. So, a big private equity firm is in this process, and they're sitting there saying, "Okay, we're going to pay $1.2 billion, $1.3 billion. We've got the bank debt in place, blah blah blah." But what happens to the senior subordinated or the subordinated piece, etc.? And so. People would come to us and would say, will you underwrite this for us, etc. Now, we'd say yes. So what we used to do is issue what they call a highly confident letter, which essentially is we haven't actually raised the money, but we are 99.999% sure that we will. So, talk about a lot of pressure on the investment bank to execute on that transaction. It's absolutely immense. And I remember just one instance, and this was a KKR deal that I was one of the more senior, almost the lead on this deal, if you will, on the financing end. And Black Monday came. Market crashed 30%, and this company was in some very cyclical businesses. And so the market sort of shut down, and KKR had committed over $1 billion, I think maybe $1.2 billion, $1.3 billion, I can't remember what the number was, a huge number. And so I literally got on a plane with guys at KKR and flew around the country and went physically knocking on doors to get this deal done. And we finally got the deal done. But that just sort of shows you how, what can go wrong. It's always like everything that can go wrong will go wrong. In this instance, everything that could go wrong did go wrong. And we fought on this. I mean, I was up for weeks, literally weeks, picking up the phone, talking to everybody humanly possible, looking at every edge as to how to sell this thing to buyers. We were raising several billion dollars of debt. Now, KKR had a huge name, phenomenal reputation, so we were able to eventually get the deal done. But man, it was absolutely. I mean, I still think about it to this day, and I remember the guys at KKR and myself flying around the country, walking up and down the street, sort of knocking on doors to try to get this thing done. We did get it done, but boy, I think I probably lost about 15 pounds in a 2 to 3 week period of time. It was just absolute elation. So anyway, again, here at Yosemite, beautiful views. Hope you can see the waterfall. If you can't, then I really aimed the camera in the wrong direction. But please visit budsforfinance.net. Remember, it's .net. And if you're interested in really pursuing a career in investment banking, or private equity, or hedge fund, or venture capital, go online, apply, fill out the application, and if you want to give me a call, you got my contact information there. We'd love to talk to you about how to best exploit what your strengths are to get into the investment banking business. So anyway, thanks for everybody's time.